And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with, well, Carol Massar and Tim Stenovec. They're back.
You say that on shore.
I have to wait till you guys pop up on the screen. I never know when Carol's taking the day off. But we welcome our audiences across all of our Bloomberg platforms who join us 5 days a week, Carol Massar, on radio, television, and even, yes, Carol, on YouTube.
4 days a week this week.
And
quick correction.
Quick
correction.
Gosh, okay.
I'm sorry.
Mr. Correction over here.
Yeah.
Hey, listen, airlines, a bit of a bummer today, down more than 2%. You guys know the story. American Airlines slashing their profit and revenue expectations. I love it. The CEO kind of saying we misjudged demand, which is kind of interesting because they just gave out projections about a month ago. So interesting. But nonetheless, American Airlines a big hit. And the group overall, Tim, down about 2% today.
Yeah, but there are some airlines that are actually doing okay. We got SkyWest higher. We got United lifted to a buy at Jefferies. So United is higher by 2.4%. So a couple airlines bucking the trend here, Alex.
Yeah, we actually talked to Jefferies analyst Sheila Kahyaoglu earlier, and she was basically saying, look, they added too much capacity in the low-end market on the domestic side where you had like the Frontiers and the Southwest competing, and that was a big issue, and that was a big strategy fumble by American. Now, if it's a macro read, though, then that's where I think the filter becomes more interesting. Is there a macro read here? Like, are we still going to Europe, just not in the U.S., or are we just not going to travel at all anymore because Taylor Swift is almost done with her tour? Big question.
Yeah.
Well, we talked about a record travel season, though, too, this summer.
Yeah, yeah.
Right?
Well, I don't know. Apparently not for American Airlines. All right, we are expecting some earnings after the bell, including from Capri, as well as American Eagle and Salesforce, HBQ, AI, Octa, and a few others as we get the closing bells here in New York with an S&P 500 back below 5,300, a drop today of more than 30 points, almost 40 points on the day, down 0.7%. The NASDAQ composite lower on the day by about 99 points or 0.6%. And the Dow Jones Industrial Average, a 400-point drop here on the day, 1% lower than where it was a day ago. And the Russell 2000 also moving lower, a huge drop there. In fact, that is your primary laggard, down 1.5%.
All right, that's your look at the big picture. Staying with the big picture and the big caps, if you will, the S&P 500, most names, risk-off trade today, folks. 444 names in the S&P 500, lower for the Wednesday trade. Alex, 57 gaining ground, 2 unchanged.
Yep, just taking a look at the IMAP function here, it's all red. Some is bigger than others. Some are bigger than others. You're looking at the IMAP industrials, energy, materials, all lower on the day, the worst performers, and utilities. So all of those, and it's so interesting that utilities is not getting the safe haven bid or the yield bid in the same way. But all 4 of those sectors down by over 1%. Tech, the least bad, but still not great.
Salesforce earnings crossing the wire right now. Their fiscal 1Q numbers, here they are. Adjusted operating income of $2.93 billion. The street was looking for $2.95. A slight miss there. Sales at $2 billion. The street was looking for $1.99. So pretty much in line with estimates. Services revenue at $2.18 billion, also in line with estimates. Your EPS for the quarter, $2.44 a share. The street was looking for $2.38. And here's your forecast for the second quarter. The company is saying the second quarter revenue will be $9.2 billion to $9.25 billion. The street on average was looking for $9.35. You see the shares under pressure here in after hours trading.
Yeah, also, Romaine, talking about fiscal year revenue, Salesforce saying it still sees fiscal year revenue $37.7 billion to $38 billion. The street estimate, though, was for $38.01 billion. So it looks like it's reining that in. But that second quarter revenue forecast really seems to be a drag on a stock that is little changed here in 2024, but now down, Tim, almost, more than 9% here in the aftermarket.
Looking for commentary in the press release from Mark Benioff, chairman and CEO of Salesforce, who says that we're at the beginning of a massive opportunity for our customers to connect with their customers in a whole new way with AI. They call themselves the world's #1 AI CRM. And Mark Benioff says we're incredibly well positioned to help companies realize the promise of AI over the next decade.
Right, that's the promise part, I think. Most analysts didn't expect the generative AI features in Salesforce applications to boost revenue until 2025 or 2026. So, but touting it when you know it's not going to come for a couple years, quite difficult. That stock getting hit quite hard. Again, just reiterating that headline, the second quarter revenue is the one that really missed there. They're seeing between 9.2 and 9.25 billion, lower than estimates remain.
Staying in the software and application space here, a much smaller player is Octa, but they're also moving lower here, and it appears to be because because of some of the same issues that we saw in the Salesforce release. This despite the fact that EPS in the quarter did come in above estimates at 65 cents. The street was looking for 55. Revenue also came in above estimates, but it's the guidance, once again, causing some concerns here. The company's saying for the full year, they're looking at revenue of 2.53 to 2.54. That's kind of slightly above what they had guided to before, but clearly not enough to satisfy investors. Those shares down 7%.
Yeah, fiscal year adjusted EPS, they're now saying $2.35 a share to $2.40 a share. The previous they had seen was $2.24 to $2.29. It looks like they're actually raising it. But again, Octa, we're seeing that down about 6.5% here. It's, again, another one of those stocks, authentication, mobile identification, if you will. And it's only up about 6% in 2024, but definitely taking about a 6% haircut in the aftermarket.
Okay, speaking of haircuts, let's go back to Salesforce, ticker CRM, because shares down about 10% in the after hours, up to 11%. This after second quarter revenue outlook missed estimates. The company sees fiscal year adjusted operating margin at 32.5%, which was in line with estimates. That second quarter sales forecast, though, trailing estimates, and the stock getting punished right now. Second quarter revenue is seen as 9.2 to 9.25 billion. Estimates, again, were for 9.35 billion. Shares of Salesforce down 9.5%.
Yeah, and it's not just the outlook. So the outlook, yes, as you pointed out, for Salesforce, not great. But you just break down some of the individual revenue sectors here. You got the service revenue estimates coming in a little light at 2.18 billion. The platform and other revenues also coming in a little bit light at 1.72. The marketing and commerce revenue estimates, though, coming in bang in line with estimates, 1.28 billion as well. So it was also a little light on some of the revenue streams.
Yeah, it'll be interesting to see what they say on the conference call, too, because this doesn't appear to be sort of a slowdown in growth specifically here. But remember, this was a company that had rewarded investors for so many years with not just double-digit growth, but we were talking like 40, 50% revenue growth. That's clearly come down. Expectations have come down. You have to wonder on the conference call, do they need to guide those expectations maybe even lower?
Yeah, a little bit of a reset, if you will, but interesting certainly in terms of what investors think, and there's pretty significant disappointment here, down about 10% in the aftermarket, but shares of Salesforce.
Salesforce has also been a company that has been a very acquisitive company over the last few years. So I think a lot of questions that people might have would include, okay, well, what are the companies that it's targeting right now? Or Alex, is it still targeting companies for acquisition as part of like inorganic growth?
Yeah, another company to watch here, Capri, not doing great. So you have adjusted earnings per share coming in at 42 cents, well below estimates. That was for adjusted earnings. For the broader fourth quarter, it was a loss per share about $4.03, also way worse than estimated. And the revenue for the fourth quarter coming in at 1.2 billion versus 1.3, so that's a miss. The stock not down too badly, but that was definitely a miss for Capri Holdings.
Yeah, not bad in the aftermarket, as you said, down about 1.5%. But this is a stock that's getting hammered this year, down about 32%. You've got about 8% of the float shorted. This is, home to brands like Versace, Jimmy Choo, Michael Kors. So definitely been kind of having some difficulty this year.
That's an understatement. I mean, where's the growth here? I mean, every division. And I thought the whole point, when we talk about how Capri was formed, this sort of mashup, this idea that if you have different brands here, if one does poorly, maybe the other one does well, and it all balances out. But 10% drop in Michael Kors revenue, 4% in Versace, 9% on Jimmy Choo. I mean, what's left here?
Well, John Idle, the company's CEO and chairman, reflects actually what you guys are talking about in the statement in a press release. He says, we're disappointed with our results as performance in the fourth quarter continued to be impacted by softening demand globally for fashion luxury goods. In our retail channel, sales trends improved sequentially in the Americas and EMEA, while trends slowed in Asia.
Is that
China.
true?
It's going to be the China. They're going to blame China.
But we didn't hear that from Richemont. We didn't necessarily hear that from some of the other European-based luxury goods makers. Why are we hearing that from Capri?
He's saying, I'm looking at the press release, he says that their brands are continuing to resonate with consumers. They've got 11.6 million new consumers added across their databases. They say that's 14% growth versus last year. Remember, he said last August, Capri Holdings announced that they'd entered into a definitive agreement to be acquired by Tapestry. Then in April, the FTC said, nope, it's not going to happen. They said they strongly disagree. So they obviously were looking for ways to do something differently, right, and tie up with a bigger brand. And that obviously hasn't played out. But yeah, I mean, to see all three brands struggling in this environment is you kind of wonder what's next for this one.
Versace stores, they were up by 5.8%, so there was that. Hermes was the one that has continued to do really well in China, but on the most part,
those are the number of stores. Yeah, that's the 5.8 is the
You are
number
correct.
of stores.
It was the number of stores.
But the sales were
Never mind.
down.
They opened stores.
9%.
Hey, there was
so they
that.
opened stores.
They did that.
Why are they opening
the
stores if
I
the
don't
sales are
know.
down?
Then you're deluding
I mean, I'm not a
yourself?
CEO, but I don't know. It seems like a pretty
I think
simple
to your point
equation.
about China, I think that
Yeah.
all the main retailers, except for Hermes, have been feeling a lot of pain in China. Full stop. You got to wait for them to come
How
back.
many of those scarves do you have, Alex?
0.
They're going to still fight this case.
I only
with
shop on
Tapestry.
sale. How many times do I have to tell you this?
I've seen Alex. You got to see Alex when she's not in her work clothes. She's like the most fashionable.
She's very stylish.
Yeah, it's like, I don't know.
Wait, thanks. Sale. Girl stops on sale.
So she says. Who knows?
All right, guys, that's a wrap. Some earnings continue to trickle out. That is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. We will see you again, same time, same place tomorrow.